investment markets have performed really well over the last quarter across pretty much all asset classes. This is shown by a couple of the markets returning really strong returns. If you look at the ASX 200, it was up 5% for the quarter, and it was up 23% for the year. Similarly, the MSCI, a popular measure for the global share market, it was up 8% for the quarter and 36% for the year. So these are really stunning long-term returns that are way beyond our average expectations. The strong market growth has really been on the back of renewed positive sentiment. Here in Australia, we've had a change of government, and that government's declared itself open for business, and that's created a lot of positive sentiment in investment markets. In the US, we've had the election of a new, or announcement of a new federal chairman with the same type of thinking as the outgoing Ben Bernanke, which has settled a lot of investors. Similarly, the delaying of the tapering or cutting back of the stimulus policy in the US has also helped provide positive returns. In China, we've seen some renewed growth come through and some shoring up of that 7.5% GDP in a number of manufacturing and similar economic indicators. And even in Europe, there's some early signs of some of those economies that are severely depressed getting some early signs of growth. So on the whole, given those positive sort of factors, we've seen really good returns across the board. Our model portfolios have performed really well. Our investment committee met last week and interviewed all fund managers and really took a good look at those portfolios. For example, on the most conservative side of things, our model portfolio returned 1.23% for the quarter, being up 8.7% for the year. This portfolio is mainly exposed to term deposits, so that's really a good result. On the more aggressive side of things, our aggressive portfolio is up 5% for the quarter and 25% for the year, which is an outstanding performance given that they're absolute return funds that are really designed to protect investors' capital and minimise losses, but then to participate on the upside. So it's been a really good performance for the quarter and the year that are well ahead of investment forecasts. Our investment committee has decided to really reward great performance and kept the vast majority of managers. We've made one small change in that we've taking some of our allocation to term deposit for more conservative investors and switching some of that into the perennial tactical income fund. This is really designed to get a bit more income for those conservative investors, particularly those who are really needing ongoing passive income, such as retirees, to fund their lifestyle. We think the outlook for term deposit rates is only gloomy, and they're likely to go down below 3% over the next 12 months. We think it makes sense to move into something that's very conservative with the aim of getting 5 to 6% each year.